For several years now, when it comes to trying to find an ETF that offers a nice balance between income potential but also growth potential, I for a long time would think of Devo, the Amplify CWP Enhanced Dividend Income ETF, which utilizes a small basket of stocks, individually sells cover calls in those names, and ever since has been offering investors around 4.5% to 5% yield per year and some growth on top of that, offering investors an annualized gain of around 11 or 12% since inception. Now, for investors like myself that are not only seeking income, but also want their portfolio to grow over time, ETFs like these have been amazing to sort of offer a hybrid approach of both. Now, Devo was my top pick up until recently because now there is a newer, even higher yielding ETF that also offers a ton of income generation, but also some upside, all very tax efficiently. The ETF I'm talking about is the Goldman Sachs S&P 500 Premium Income ETF, which I think could be a perfect ETF if you are seeking the potential for high income generation, but also some growth and some upside in your portfolio. In this video, we're going to dig deep into GPIX, go over what this ETF has to offer, and share with you guys certain things that I've never talked about before when it comes to this ETF on this channel. So if you're a dividend-focused investor that wants some income, but also wants some growth in your portfolio, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, the idea for this video came about when I was reading through this article on seekingalpha.com from Kane Lee, where Kane was talking about going over GPIX, and it says a tax efficient way to keep your retirement linked to the S&P 500. Now, obviously, GPIX is the Goldman Sachs S&P 500 Premium Income ETF, so it does offer exposure to the S&P 500, but through a high income strategy. The summary says GPIX offers retirees high tax efficient monthly income and S&P 500 exposure, making it ideal for low risk income focused investors' portfolios. The fund's dynamic option writing strategy generates an 8.2% yield, which is not bad whatsoever, while maintaining partial market upside and price stability. Also very important, GPIX's distributions are mostly classified as a return of capital, deferring taxes, and providing consistent payouts, which benefits retirement planning. He then said the creation of some newer option ETFs like the Goldman Sachs S&P 500 Premium Income ETF, GPIX, checks off all the boxes. Therefore, I believe that the fund could be a solid place for retired investors to seek high income, or even investors like myself that are working towards that, all while simultaneously maintaining exposure to the S&P 500, which a lot of us might or might not want. Now, before we go over some of the basics on how the ETF works, looking into the tax-efficient dividends that this ETF offers, like we heard a second ago, around an 8.2% yield, which is not bad whatsoever. Another attractive aspect of GPIX is that it pays its distributions out on a monthly basis. A monthly distribution is great for investors that will be living off their income like I'm trying to do in the future. This creates better income flexibility and eliminates the need to wait for dividends to be deposited in your account every quarter. As of the latest declared monthly distribution, 35 cents per share, and the current yield sits around 8.2%. Now, they then say that the distributions received from GPIX are tax efficient because of their return of capital classification. ROC, or return of capital distributions, are commonly confused as payouts that are essentially funded by your own capital being handed back to you. However, return of capital is merely a tax classification, and the distributions are being funded by the option premiums and dividends received from the holdings. Now, as of the most recent 19A-1, it indicates that 89.2% of the distributions were funded using return of capital. Now, this could be a good thing for retired investors because return of capital distributions are not classified as income, therefore they're not going to be taxed as such. Instead, these return of capital distributions reduce an investor's cost basis and allows taxes to be deferred until the time of the sale, or of course until your cost basis hits zero. Now, digging a little bit deeper into GPIX, the ETF that I do think at this point could be the potential perfect ETF for investors like myself that are sort of hybrid investors, seeking some income of course, but also wanting some upside in their portfolio. Now, that's exactly what the objective is for this ETF. It says seeks current income while maintaining prospects for capital appreciation. Now, the main thing that this ETF has that a lot of other S&P 500 high income ETFs offer is that the ETF provides diversified equity exposure to the S&P 500 index and dynamically sells call options allowing for participation with rising markets and potential outperformance in negative to flat markets. Now, because this ETF dynamically sells call options, there's a few things you have to know here. For one, the yield is not going to be insanely high. There is going to be part of the overall holdings that are going to be uncapped, which means there is the potential for a lot more upside. Now, you can definitely see that that's the case, especially if you look at the performance of this ETF. It's only been trading since October 23rd of 2023. And the ETF, even though it is a premium income ETF, basically seeking high income generation, the ETF, because of the strategy and because of how the S&P has traded over this time frame, the ETF is up around 26-27% just as far as price return goes. Now, another very important aspect to this, which I absolutely love, is the fact that if and when the S&P drops, let's say the S&P drops for a day, 5 days, a week or two, GPIX will of course drop along with it, of course with a little bit of downside protection from the option overlay. But the real thing that I love about this ETF, because of the strategy, is if and when the S&P recovers, which in my opinion the S&P at some point, probably, in my opinion, will always recover, this ETF is going to have a much better, easier time recovering because, again, the entire underlying is not capped. Now, that's one of the main issues you see with a lot of premium income ETFs, especially ultra high yielders. Everything's all fine and dandy when the market's trading up or sideways, but once there's a dip in the market, the ETF will drop with it also. That's not necessarily the problem. It's regaining the lost ground because of the capped option strategy a lot of these option income ETFs utilize. It's going to be very hard to make up for lost time. So again, to recap, the main takeaways here is that this ETF is not going to offer a mega amount of income, although 8% plus yield is not bad whatsoever, but also it's going to be able to recover a lot faster if and when the underlying, in this case the S&P 500, does choose to recover, which like you can see during the tariff sell-off right here. So as always, you have to ask yourself if that means a lot to you, if you do want to hold on to something that maybe doesn't pay as much income, but does have the potential to recover a little bit faster. For myself personally, I hold on to names like this, as well as other names that also offer more income generation, less income generation. I diversify across many names in my portfolio. So at least so far since inception, this ETF has been more than stable as far as price return goes. The ETF offers S&P 500 exposure with, of course, the potential for upside, along with the main goal of producing income, which as of right now is around 8% per year. Not to mention that income is very tax friendly if, of course, ROC is what you're looking for. But it's not only that, because of this ETF specific unique strategy that it utilizes, the total return since inception of this ETF has been amazing, up around 45+% as far as total return goes. Now sure, the ETF is still trailing slightly behind the SPY at around 52% total return over the same time frame, but again, if you are an investor that's seeking high income generation, you're probably going to underperform the index at least a little bit. That's where the tax you have to pay to do so. But if we stack up 3 quality ETFs, in my opinion, GPI, next to SPY, next to GPIX, it's not even close. GPIX is outperforming these other high income ETFs by a mile. So again, I have no idea what you guys are looking for throughout the market, but if you are looking for an ETF that does offer the potential perfect mix of income and growth, all while doing so very tax efficiently, this ETF might be my new favorite across the entire market. Like I said, for years now, I've always said that Devo was the #1 ETF if, of course, you're seeking high income generation and capital appreciation. But honestly, GPIX is probably my #1 pick as of right now, if of course you're looking for a nice solid all-in-one hybrid approach. Now before I go, I do have a question for you guys down below. Do you guys currently hold any GPIX in your portfolio? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.